Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we will discuss about how to compute income tax for individual taxpayers who have changed from 8% optional rate to graduated rates during the year. So if you're ready, let's start. As a sort of recap, individual taxpayers are subject to either graduated rates or 8% optional rate, subject to the following rules. So, number one, the incomes derived from employment or compensation incomes are always subject to graduated rates, while the incomes derived from business or practice of profession could be subjected to graduated rates or to the 8% optional rate. It depends whether if the annual gross sales or gross receipts in other non-operating incomes is more than 3 million, then it will be subject to graduated rates. But if the annual gross sales or receipts in other non-operating income is not more than 3 million, the taxpayer has the option to choose whether to subject these incomes to graduated rates or to the 8% optional rate. Okay, so this is our two tax regimes in the Philippines for individual taxpayers. Meaning to say, if you are a business income earner or a professional practicing your own profession or a freelancer or doing service for others, and your annual gross sales or receipts in other non-operating incomes is not more than 3 million, you have the option whether 8% optional rates or the graduated rates. So, what if the taxpayer whose prior year's annual gross receipts or sales in other non-operating incomes do not exceed 3 million initially chose to use 8% optional rate, but later during the year breached the 3 million threshold? So what if the taxpayer initially chose the 8% optional tax regime, but later on during the year, he breached the 3 million VAT threshold? So the answer is, according to Revenue Regulations number 8-2018, Section 12, it provides that a taxpayer who initially presumed that his gross sales or the gross sales or receipts in other non-operating income for the taxable year will not exceed 3 million VAT threshold, but has actually exceeded the same during the taxable year, shall immediately update his or her registration to reflect the change in tax profile from non-VAT to VAT taxpayer. So for example, if during the months of January to July, you are enjoying the 8% optional rate, but for the month of August, you have exceeded the 3 million VAT threshold, then after that month, after August, on September, you must immediately update or change from non-VAT registration to VAT registration. And what will happen to that is that you will no longer qualify for the 8% optional rate because you have already exceeded or breached the 3 million VAT threshold. Okay? He or she shall be subject or required to update registration immediately within the month following the month she or he exceeded the VAT threshold. So, if you exceeded the 3 million VAT threshold on August, then you must update your registration on the next month, on September. Okay? And not later than that month. And he or she will be liable to VAT prospectively starting on the first day of the month following the month when the VAT threshold is breached, and he or she shall pay the required percentage tax covering the sales or receipts and other non-operating incomes from the beginning of the taxable year or commencement of his business or practice of profession until the time the taxpayer becomes liable for VAT. So later on, we will show you an example on how to compute income tax for this taxpayer who has breached the 3 million VAT threshold. So that is without imposition of penalty if timely paid on immediately succeeding month or quarter. Such taxpayer becomes liable to VAT on the day when such updating is made. So if you have breached on August, then on September, you should update your registration from non-VAT to VAT. Okay? And after you have updated, you will be now liable to VAT. Okay? In this case, the taxpayer shall automatically be subject to the graduated rates if the 8% optional rate or income tax rate is initially selected, and any income taxes paid under the said flat rate of 8% shall be deducted from the income tax due under the graduated income tax rates. So we will show you an illustration. So we have here, on January 1, 2020, Juan expected his annual gross sales to be at 3 million pesos, including all other non-operating incomes. Confident that he would not breach the VAT threshold, he did not bother to register his business under the VAT system. So meaning to say, Juan registered under the non-VAT system. And he chose to be subject at 8% optional rate beginning the first quarter of the year, ending March 31, 2020. So, during the year 2020, he had the following non-cumulative information. Again, this information below are non-cumulative. So, we have here for the first quarter, second quarter, third, and fourth quarter, gross sales of 800 and 750 and 800,000 pesos and 800,000 pesos for fourth quarter. We also have here other non-operating incomes of 200,000 for the first quarter, 170,000 for the second quarter, 240,000 for the third quarter, and 310,000 for the fourth quarter. And we have also here the cost of sales from the first to the fourth quarter and allowable deductions from the first to the fourth quarter. Okay, so these are the data of Juan. So if you look closely in the figures given, particularly in the gross sales and other non-operating incomes, you would notice that Juan would likely to exceed after the third quarter. Okay, so we will first compute Juan's income tax dues for the first, second, and third quarter. So Juan in the first quarter will have to pay, of course, for the 8% optional rate because he thought that he would not exceed the 3 million VAT threshold. And the same will go for the second and third quarter. But after the third quarter, on the fourth quarter, Juan would notice that he would exceed the 3 million VAT threshold. So what we're going to do here is to first compute the income tax dues for the first three quarters, for the first, second, and three quarters using the 8% optional rate, and then we will compute the tax due on the fourth quarter using the graduated rates. We have here non-cumulative data. So gross sales, 800 for the first quarter, 750 for second quarter, and 800 for the third quarter. And we will add the other non-operating incomes. We have 200,000 for the first quarter, 170 for the second quarter, and 240,000 for the third quarter. Our total gross sales and other non-operating income of 1,920,000 and 140,000 pesos, we are no longer have to deduct for the cost of sales because for the first three quarters, for the first, second, and third quarter, Juan is thinking that he would not exceed 3 million VAT threshold. So therefore, he will have to pay for the 8% optional rate. And as we know, the tax base for the 8% optional rate is the annual gross sales and receipts plus other operating incomes after we deducted the 250,000 pesos. Because Juan here is not a mixed income earner, so therefore, we can deduct the 250,000 pesos. But before that, we will have first to add the last quarter's gross sales and other operating incomes. Okay, why do we need to add the last quarter's gross sales and other operating incomes? Because again, these data are non-cumulative, and in the computation of income tax dues, it should be cumulative. So for the first quarter, our gross sales and other operating income is 1 million, and we will have to carry over that to the second quarter to get the total gross sales and other income for the second quarter of 1,920,000 pesos. And that amount will also be carried forward to the third quarter to get the total gross sales and other income of 2,960,000. So when we compute the non-cumulative data for the first, second, and third quarter, we will not notice that this will likely to exceed the 3 million VAT threshold. But when we computed the data using the cumulative basis, take note, on the third quarter, it's almost 3 million. Okay? Hence, one will likely to exceed after the third quarter. So after we have computed the gross sales and other non-operating incomes, we can now deduct the 250,000 pesos. So you might be asking, why do we deduct each quarter by 250,000 pesos? Again, you can only claim 250,000 pesos once in every taxable year. But in this case, we claim 250,000 pesos in each quarter because each quarter is cumulative. Now, a cumulative amount. Because this amount is now cumulative. That 1,920,000 in the second quarter includes the 1 million in from the first quarter. And that 2,960 in the third quarter includes the 920 from the second quarter and the 1 million from the first quarter. Therefore, since this 1 million, 1,920,000, and 2,960,000 are all cumulative, okay, these are all cumulative, we will deduct the 250,000 pesos each in each quarter. However, take note of this, you can only claim 250,000 pesos once in every year. Okay, only once. Okay, take note of that. But in this case, again, these data are cumulative. Okay, these data are cumulative. This 2,960 includes the 920. This 2,960 includes the 1 million. So therefore, we need to deduct again the 250,000 pesos exemption limit as if we have not deducted it from the first quarter. After we have deducted the exemption limit, we have the tax base of 750,000 pesos for the first quarter, 1,670,000 for the second quarter, and 2,710,000 for the third quarter. And we can now multiply by 8% optional rate. So the income tax due for the first quarter is 60,000 pesos. And for the second quarter, we have 133,600. And for the third quarter, it's 216. But again, this data, this income tax due is cumulative. So for the first quarter, Juan's income tax due is 60,000 pesos. This is the amount that Juan should pay in the first quarter. Okay? But since this amount is based on the 750 or on the 1 million, which is also added for in the second quarter, meaning to say this 133,600 includes the tax due from the first quarter. Okay? So therefore, we will deduct on the second quarter's income tax due from the 133,600, the 60,000 pesos. We will deduct that because this amount, this 133,600, includes already the amount from the first quarter. Okay? So we will deduct that to get the income tax due and payable of 73,600 pesos. And again, this 216 in the third quarter includes the amount from the first quarter and the second quarter. So therefore, this tax due also includes the taxes from the first and second quarter. So again, we will deduct that. That 133,600 is actually the 60,000 pesos from the first quarter and the 73,000 pesos from the second quarter. Okay? So therefore, the total amount, the total income tax due and payable for the third quarter alone is 83,200 pesos. So by looking at the data as of third quarter, we know Juan would exceed the 3 million VAT threshold beginning October 2020. So therefore, there will be a change. He will no longer be qualified for the 8% optional rate. For our second situation, we will compute the income tax due for the annual income tax return. Meaning to say, by the end of September, end of the third quarter, Juan will not yet breach the 3 million threshold as he only had 2,960,000. Okay? So he did not breach yet the 3 million threshold as of September. But by October, Juan will surely exceed the 3 million threshold. Okay? That's October. So therefore, he shall be required to update registration immediately within the month following the month that he exceeded the VAT threshold, meaning on or before November 13. So Juan will exceed the 3 million on October. Therefore, on the next month, he should immediately update his registration, and the deadline is on or before November 30, 2020. From then, he will be taxed at graduated rates since he will be taxed at graduated rates since he is no longer qualified for the 8% optional tax rate. So we have here the gross sales cumulative. This is from the first quarter to the fourth quarter. And since Juan is no longer qualified for the 8% optional rate, we will use the graduated rates and we will use the itemized deduction. So we will deduct the cost of sales, that is 2,230,000. We have a gross income or gross business income of 920,000 pesos. And we will add the other non-operating income of 920,000 pesos to get the total gross income of 1,840,000 pesos. And from then, we will claim the deductions of a total of 530,000 pesos to get a taxable income of 1,310,000 pesos. So, we can now compute the annual income tax due of Juan using the graduated rates. Again, Juan is no longer qualified for the 8% optional rate. So, we will look here in our tax table, and the taxable income of 1,310,000 is over 800,000 but not over 2 million. So the tax due is 130,000 plus 30% of the excess over 800,000. So the tax due for the first 800,000 is 130,000 pesos, and the tax due in the excess, that is 1,310,000 minus 800,000 times 30%, the tax due in excess of 153,000 pesos, and the annual income tax due using the cumulative basis is 283,000 pesos. Okay? And we will deduct the income taxes paid for the first 3 quarters at 8% optional rate. So for the first quarter, the tax paid was 60,000 pesos, and for the second quarter, Juan paid 73,600 pesos, and for the third quarter, Juan paid 83,200 pesos, a total of 216,800 pesos. So Juan's tax due and payable for the annual income tax return, which will be paid on or before April 15, 2021, is only 66,200 pesos. The 8% income tax paid by the taxpayer shall be credited or deducted from his annual income tax due using the graduated income tax regime. So this is according to Revenue Regulations number 8-2018, Section 12. That's it. That's how you compute basically from when there is a change from 8% optional rate to the graduated rates. Okay? In the annual income tax return, you have to use the graduated rates when computing the annual income tax due, and he will have to deduct the income taxes paid from the previous quarters using the 8% optional rate. Aside from that, the taxpayer will be required to file and pay the 3% percentage tax from January 1 to October 31, 2020. These are the months where the 8% optional rate was still enforced. And the deadline for the filing and payment is on or before November 20, 2020. This is without imposition of penalty if timely paid. So you might be asking, why would Juan pay the 3% percentage tax rates? Because it is as if that Juan have not filed the 3% percentage taxes. Because as we know, we have claimed all those taxes as credits, as charges against our income taxes. Remember, in our computation, we deducted those amount, the 8% amount from the annual income tax due. So it is as if that the 8% income tax due covers only the income taxes of one. Basically, the 8% covers both the 3% percentage tax and the income tax. But in this case, since there's a change, it is as if that the 8% optional rate covers only the income tax due of one for the first, second, and third quarter. So therefore, one will still have to pay for the 3% percentage tax as if there was no filing at all. Okay? And Huan shall be liable to VAT prospectively starting on the first day of the month following the month when the threshold is breached, meaning on November 1, 2020 and onwards, Huan will pay the VAT. Okay? That's it. So I hope you learned a lot from this video, and thank you so much for watching. Bye!